Hello, everyone. You can see here our website. We just opened it up to the public about 2 weeks ago. Lending Club is an online community where borrowers and lenders can exchange funds, bypass banks, and get better interest rates. We were the first financial services company to ever launch on a social network. And in our first 100 days on Facebook, we helped Facebook users lend and borrow over $1 million. And you thought Facebook was just for college kids. One of the biggest challenges, I think, to any to any financial services company, and certainly to Lending Club, is building a community of trust. And that's where the Facebook opportunity made so much sense to us. Facebook adds more than 200,000 users every single day. They have over 40 million active users. And they have a very strong, trusted network. This is Patrick's profile. And as you'll see, Patrick will go into his networks page where he's a member of a variety of groups. One is the Silicon Valley group. And you can see here, these 66,000, well, actually, you probably can't see in the back, but those 66,000 people are all connected because they live in the same geographic area. If we look at the UPenn group, I think it was about 30,000, 35,000 people are all connected. And there's certainly a lot of information that is relevant to UPenn, also relevant to MIT. Here's another 20,000 people in the MIT network. So Patrick is kind of part of a small town of people who all know each other. Whether it's because they live in a certain area, whether it's because they went to the same school, there's a certain level of trust that they can certainly benefit from. Now, Lending Club is an application, as you can see in the top left, inside of Facebook. So we launched with the Facebook Open Platform. And what it allows us to do is be present inside of Facebook, but also pull all the connections and networks that are inside of Facebook onto our regular platform. And what we'll do now is just click through to, back to the Lending Club site that you saw before. Now, I mentioned that Facebook users had done about $1 million in loans. There's certainly a lot more money if you look at the open market. There's $2.5 trillion in debt in the United States. It's $8,000 for every man, woman, and child in the country. That debt is typically financed through credit card companies and banks, where the average interest rate is about 15%. That's a lot more than the 7.5% that Lending Club starts at. Typically, our rates are about 25% better than that you'd get at a bank or a credit card company. Now, you wonder, where do all those funds go to? Where does that interest margin go to on behalf of banks? Certainly, it's to pay for a lot of the infrastructure, their necessary institutions. They also have 80,000 bank branches and several million employees. When you start to look at where those funds come from, they're effectively people on one side giving money to the bank and people on the other side borrowing money from the bank. What we do is really leverage the internet to have a more efficient platform. When you lend, the average interest rate is about 12%. Now, one of the things that is certainly a big differentiator for Lending Club versus a bank versus other people in the space is a technology that we call Lending Match. Now, what Lending Match does is it really simplifies the process for people who use our service. It looks at the credit risk that someone is comfortable with. It looks at connections that may already exist between the lender and the borrower. And it also looks at where loans currently sit in terms of their financing needs. So what you can see Patrick is doing right now is signing into Lending Match. So what we do with this is allow a person to put in an amount that they're comfortable with lending. So Patrick is comfortable with $500. Look at the risk that the consumer is comfortable with lending money at. They can take more risk or less risk. And certainly you'll see the interest rate changes based on the existing pool of loans on our system. And what it does now is really go out and look through that portfolio and say, let us find a group of people who want money at a given interest rate. Let's look at connections that may exist between those people. And as we saw before with Patrick, if he clicks on the connections here with debt consolidation, what you'll see is how is Patrick connected in. In this instance, it's a person who also went to MIT. If we look at other things that lenders can look at, it's certainly not all summary information. You can see on the far right, it's roughly $25 increments that are being lent to, that is allowing the person to have a diversified portfolio. If Patrick clicks on one of the loans, there's additional information that is given to the lender. So what you'll see is not only specifics about the loan. So in this instance, you see $2,000 in funding has been received. 24 different people have already funded that loan, so it's certainly very well diversified. There's a couple days left. You also see down here credit information that is available from the credit bureaus. And everybody uses the same information, right? It's trusted, reliable information that shows, does the person have any delinquent accounts? What's their revolving credit balance? What's their earliest credit line? They can put in their own text in terms of how they plan to use that loan. What you won't see with this is any personal information. So it's all anonymous. Lending Club goes in and uses pretty standard technology to verify the user's identity, authenticate them, and pull this basic information. If we go back to the portfolio, what you'll see is, so for that $500, 20 loans, and what Patrick can do right now is check out. So what this is doing is basically allowing that loan to complete, submit the portfolio. Now here, Patrick was able to help 20 people who may be connected to him in some way for an average interest rate of 12.4%. And that's really what Lending Club does. I mean, you can see it was pretty efficient, pretty fast, and leverages the power of connections. Thank you.